Anand, hi, good to have you with us. How have you been?
I'm well. How are you?
Doing very well, Anand.
Good to
This
see you,
is
Ashu.
this is an interesting conversation, right? I think any conversation today with an investor is an interesting conversation. I think given the enthusiasm and the focus that we have, right?
Yeah,
Also sort of becomes a very interesting opportunity to understand their perspective on India, right? Because India traditionally is an extremely complicated economy. We've operated across many
yes,
layers, but I think COVID has been unreal. It's brought in a certain sense of opportunity. And I think it's understand those nuances, right, from an investor's lens, right?
Hmm.
And that one makes our conversation interesting, and looking forward to this one.
Indeed. Thanks, Ashu. Thanks.
Anand,
Thank you for having me in here.
Anand, before we dive into the session today, right? I'd love to know a little more about you. You've been there, right? You've been in the investing space for a reasonable amount of time, right? Just
Yeah,
take us through your journey, right? And that becomes a starting point.
sure. A lot of people don't know this part of me. I actually was building a very small company after my BBA back in Kerala University
Uh-huh.
in Toronto. It was just selling computer hardware to the local IT park. So that's what you're doing initially, like just assembling computers, nothing hardcore. But it's probably the first time in which I kind of got in touch with the technology ecosystem and the entrepreneurship journey, etc. Later went to do my MBA, and then one of the biggest breaks I would say into the investing world was when Sequoia came to India in 2006.
Right.
So a bunch of us from McKinsey joined the firm, and I was lucky to be part of that group. And that's where a tech investing journey started back in 2006 for me. But a lot of what I learned also in growth capital investing and scaling businesses and seeing companies at scale was actually from Asia Pac, especially in China. And also, like interestingly, Australia is another market where I've invested in fact, software company in Australia, which it took out from public markets back in 2008, like MIOB, which made quite a lot of. So interestingly have got exposure to not only India, but also scale companies in everywhere from China to Australia to US. And that has helped.
Wow.
And then 2015, along with my partner, Stelda and
Very interesting. And I didn't realize being mentioned with many startups, right? I think you've been instrumental in some very entering organizations and these startups at a very key point, right? And I think
yes.
the journey from there on has been absolutely different, right? Tell me a little
Yeah.
more about the fund, right? The construct of the fund, and which are some of the
Yeah.
key areas for you when you're looking to sort of invest.
Got it. So talk about the construct of the fund. What we do is like we see a lot of early stage founders, and every month we pick up 3 or 4 companies where we try to kind of engage early on. And we have a network of global CEOs and CXOs called Iron Pillar Network,
Right.
which and we actively work with this network to help these companies before our money itself goes in. So that's a very unique model that we have started. And then our capital typically goes in when the companies hit a particular inflection point in growth. Right? And there are certain milestones which you look for. If it's an enterprise tech company, it's a 4 million ARR. And if it's a consumer tech company, it's a $10 million revenue run rate, etc.
Right.
But these are just numbers part. But also there are multiple other things which you look at as a parameter of is a company hitting a growth inflection point? And how can Iron Pillar bring not only the capital, but also our global network to help these companies grow? And so I told the global network part a couple of times. So that's one of the key areas of focus. We are looking at companies which can grow globally. We are not looking at just India as a market. We believe in India's ability to build for the world. And that is something which from day one we had been focusing on. Like, so today you hear a lot of interest on SaaS, but like for 2016, there's like a few people like Shaker of Axel and the guys in Nexus and people like us who were investing in that space for the last 5 years, right? And today we are reaping the benefits of that. So that's the area of focus for us in terms of investing the global companies which are building.
Very interesting. Anand, before I dive into, specifically touching upon, the global CEO network play that you mentioned, right? I think you highlighted in your earlier point and quite, and I think that's possibly part of the core thesis that you have, right, as a construct. I'd love to understand a little more about the portfolio, right? I mean, you're focusing on enterprise tech, enterprise, right? Tell me a little more about that, right? Which are some of the companies that you've invested in?
Yeah.
And how's the journey been post-investor?
Look, we were lucky, I would say, to a large extent, and also some of the situations where our global network was able to help some of these companies more than usual. So if you talk about our fund one, which had 8 companies, there are 3 companies which are phenomenally breaking out. One of the companies is Unifor. You would have come across that. They recently raised a $150 million round, led by Sorensen in the US. We think that that would be a big, probably we believe in building billion-dollar revenue companies, not billion-dollar valuation companies. So we believe that that is a company which has got that opportunity to become a billion-dollar revenue business, and obviously have a standalone business as a public company. And that's the aim of the founders also. So that's one company which has been like a rocket ship. Another company which is building from India for the world is Servify. It's again a quite an understated company. They are building from Bombay, but now they have like some of the best clients in the world, like an Apple and Samsung, etc. Their entire after-sales ecosystem. They're so much entrenched and growing globally, like super fast. Especially last 18 months, the company had been growing like so phenomenally. Like we were having a conversation today morning, like, when should we go public? That's the way that you should think about, like, because the ambitions of the founder also have actually grown up. Obviously it's still a journey to become a public company, etc. But we clearly see that as another breakout. Fresh to Home is another company in our portfolio, which has done very well on the consumer side. And they've also grown not only in India, but also in the Middle East. So India, we are going deeper and deeper into more cities and formats and things like that. And the Middle East, we are expanding in different countries at this point of time.
Very interesting. I personally have been, I've had a thesis, right? I mean, you have to be an export-driven nation, right? Unfortunately, for India, we've continuously be very inward-focused, right? I mean, and I think that there's nothing wrong with that because we've been a very large economy in any way, right? But when you look at export as a possibility, right? I think there've been many challenges, right? I mean, typically we've been looked at as essentially a low-cost technology player, right? From an engineering standpoint, from an awareness standpoint, from an exposure standpoint, right? I think there was always a question mark, right, in terms of the delivery capabilities, and of course, some companies have been exceptional, right? Freshworks, for example, and a bunch of others, right? Some of the companies in your portfolio have been absolutely exceptional, right? Do you think in a post-COVID sort of an environment, that is kind of changed, where adoption by or Indian innovation, right, especially in the enterprise tech, enterprise tech space is being adopted much faster, and there's very clearly a cost price arbitrage as well, which exists, right? Do you think it's this entire scene that we've seen in the last 1.5 years, right? It's kind of fast tracked the possibility for Indian enterprise tech stuff, business to grow in international markets.
Look, so first of all, yes, there is a cost advantage, and I'm not saying that there is no cost advantage, and that's an unfair advantage Indian founders have. But the kind of customers whom they cater to are not people who are like, so this is not an outsourcing business, right? That we are into, right? Say, for example, if Unifor is taking their speech AI product to a global customer of them, like big telcos in the US, etc., they're not going to say that I'll buy Unifor's product because this is like 15% cheaper, right? They're going to compare it with the best quality product in the world, and that quality is the most important thing, right? And same is the case in other companies in our portfolio, whether it is Usher or CoreStack or Servify, like any of them. Like, you go and ask Apple or Samsung whether any other company in their ecosystem or which they know globally can actually match Servify and its technology, and the answer is no. That's the reason why they're rolling out Servify across the world. It's not because of the cost advantage. Now, very interestingly, last week I was listening to an interview by Mark Andreessen, and first time somebody like Andreessen Horowitz, who basically said, look, we like to keep a small team in one office in Silicon Valley, and we want to operate. So this is in the famous Bloomberg interview last week. She said, look, the world is not the same anymore. Right? People are like a company like Coinbase went IPO, very specifically stating that we don't have an office. Right? We don't have an HQ. If you really look at it, they actually took out whatever their registered office, also saying we are a company on the cloud. So that's what's happening today. Like globally, best software-based companies are becoming companies on the cloud.
Right.
So whether you're building from Bangalore or Chennai or Silicon Valley or Houston, doesn't really make a difference. Then the question is, okay, fine, if you have the same quality engineer sitting in Bangalore who could actually code, then why should not you, like, then it becomes, okay, fine, where is the talent? And what is the cost of the talent?
Right.
And that India do have an advantage, very clearly. So it's definitely high quality products and with a little bit better cost structure. So Indian founders are actually out there to win this market dynamic. I think COVID is a positive.
Interesting. Anand, I think there's a very interesting point that you kind of highlighted, right? And I think, and I completely buy that. I think when you're operating in an environment which is as competitive, right? I mean, price is an ancillary. I think quality is something which is paramount, right? And I think this is essentially what most of the organizations that are operating in mature markets are essentially sort of geared towards, right? To ensure consistency and quality, right? And I completely understand and buy that, right? But Anand, an offshoot of that question is that co-innovation is very, very important when you're operating in that kind of environment, right? Understanding the consumer side sensitively, right? And that's something which you would need to be a part of that delivery process, right? To understand the consumer better, right? Do you think and there are many companies now in India which have global aspirations, right? Do you think it's an important construct? And while possibly you are looking at a company, right, from an investment standpoint, right, does it become important to understand the founder and his or her understanding of that market, right? And is there a very critical need for them to go out and co-innovate? I mean, the product might not necessarily be an exact fit, right? But there's certain improvisation, there's certain customization that could happen depending on that particular customer. Right? Do you think that's a must, a necessary in
it's
general,
a must.
and when you're looking to invest?
No, it's kind of a must, and especially at the stage where if you are already in growth stage of the company, like Series B, Series C, etc., if that DNA is there, it will become a big challenge for the company to grow. So there are actually two specific things. Right. One is what you just mentioned, which we call in our team as founder market fit. Right. Say, for example, if you're think about if you're building an enterprise product for large enterprises in the US. Now, one of the key things is the team should have, they should have a good product capability, etc. But the team also should have people, ideally a co-founder, who understand the clients and understand the client needs very well, and who can actually translate that to the product, who are sitting in India, etc. So that ultimately, so what kind of people are these? These are people who are building the company. They're not first time touching, say, US or European market. Right. They would have already worked with like a massive, like say, think about Core Stack's team, right? So this is now they're building cloud security product for in the cloud governance space. But they're pretty much the team which are built Azure for Microsoft. Right. So, and they have people like Jim Dubio, who was a former CIO of Microsoft Global in their board. So it's that which actually makes a difference, that founder market fit. The second thing is ultimately enterprise sales, or like, again, by the way, the same thing applies in consumer also, right? In a consumer, if you are going to say Middle Eastern market or South Asian market, you should have people in the team, either a founder or a senior member in the team, who understand the local market nuances. Otherwise, you cannot just copy paste the things. Right. Now, when you go to market, in the consumer side, I think Indian founders actually get that go to market easier in other markets, because other markets tend to be operationally easier than India. India is actually normally operationally even more challenging, so they're good. But the enterprise guys who go to say US, etc., and I always tell this that you need to get your GTM right. In fact, GTM is one area where a lot of Indian enterprise tech companies which are building from India to the world stumble, or like they take a long time in coming up in the learning curve. Right. So at the stage, the growth stage, a fund like us really look for, have they got the GTM right? Interesting. Which basically mean that they already have a co-founder who understands the GTM. Sure. Or they have a superstar, like senior executive who's coming in along with the rod, who actually understand GTM. And again, people like us, we do have a strong network in Valley and elsewhere, who can actually help them in this GTM. Like, Lars Nielsen in our Antpiller network is a great example. Like, he runs inside sales for Snowflake. So somebody like Lars can actually help these companies in getting the GTM right. Very interesting.
Anand, you mentioned something about the having a pack of global CEOs who work with, right? And that's an ecosystem that you've created, right? And I think
Yes.
that's a very important hedge, if I can call it, right?
Got it.
Especially in an environment when you are operating where there is decision making can take time, right? I mean, you need to
Yes.
have people who can move it faster for you, right?
Yes.
There's money on the line, right? And of course, it's a competitive market, right? And so many others. Tell me a little
Absolutely.
more about it, right? How does this piece work, right?
Yeah.
And how is it available for the founders? I mean, is this like a more consistent thing, which is available on a say a fortnightly basis or a monthly basis, or is this something which is on call, on demand, as and when they require, as and when they need? This is something which is available for them. Tell me a little more about the construct of this relationship,
Yeah.
the structure.
So look, it's more of the latter that you mentioned. So it's actually on call, on demand whenever it's needed, because
Right,
look, a lot of the CXOs are also extremely busy people.
right,
So how much of their time you can actually take uh, is a matter of like, it changes by the
right,
month or week, right? So
right,
but what we do is like, when we really find a founder who's building something which you think will be very meaningful and is building for the world from India, then we actually say, okay, fine, here is something which you can actually do. Like, so you are trying to kind of figure out answers for A, B questions.
hmm,
We think that B probably will not be able to help, but
right,
A, there is somebody in our network who can actually help.
right,
And here is the introduction, etc. And then sometimes we actually do even much more closer handholding
right,
and things like that. There are situations where people even have raised capital from our network. So
right,
the Series A investors or seed investors, etc., came from our network. So
hmm,
it all depends on what the company needs
sure,
and where the network have. And our look, ideal scenario is everything which a company which you like needs. We have a person in our network who can actually fill that gap.
right.
But look, we're not Andreessen Horowitz or Sequoia, who actually have that kind of a 50-year or 30, like, I don't know, like 20, 30 years of networks of
Right.
people. But we are building that. We are just, 5-year-old firm. And I think we are up in that curve quite a lot at this time.
Interesting. I mean, I think it's important to have a thesis, right? I think not a lot of people out there have a very solid construct, right?
Mm.
And I think if you don't have a construct, it's very casual, right? I mean,
Yeah, yeah.
I've built an accelerator. I've run an accelerator where we had 300 CEOs, CXOs, right, who are a part of it. But we had
Yes.
something solid at a design level.
Yeah.
And something that I experienced, right? And this is
Yes.
essentially an offshoot of the point that you highlighted, right? Is typically when you have this kind of an ecosystem which is there to support
Mm.
founders. Typically, what happens is a CEO and a CXO of a large enterprise is operating in a very different environment, right?
Yes.
For him or her to come to a level and say handhold and entrepreneur understand those challenges is very difficult, right? And
Mm,
I
mm, mm.
classically put it right. A CMO of a very large listed entity would deal with $500 million worth of a budget, annual budget, right? For him to sort of help a startup which is going to essentially spend just about a couple of $1 million acquiring that customer is extremely
Yes.
a very difficult world, right?
Yeah,
Uh,
yeah.
I mean, how do you sort of bridge that
Great
gap?
question, actually. Great question. So look, it's a function of who we pick in that
Right,
network. So our typical people who are in the network. So just I give the name of Lars, for example,
right,
earlier, right? So Lars, before Snowflake, he was in Cloudera, and before that, he had actually like taken two other companies, again, the journey from like startup to IPO, right?
sure,
So he's a person who is a consistently interact with startups in Valley.
right,
And he have worked with 4 startups all the way from start to IPO, right? So he understands the growth journey.
right,
It's not a person who has been like a big corporate executive all the time. Like, they did not really start off at Xerox and just be in that large kind of
sure,
companies all the time. So we try to kind of pick people like that. Like, for example, Karthik Hosanagar is another gentleman in that network. So he's been an entrepreneur, a professor, now becoming an entrepreneur again, like in
right,
his new company. So they understand the 0 to 1 journey, they understand the 1 to 10 journey, and they understand the 10 to billion dollar journey, right?
right,
So we try to kind of get to ensure that people who come in are actually people who understand that and that journey. The
sure,
second is also the scale of the company. Say, for example, a business like Fresh to Home, which is
right,
like 100 million plus revenue business, right?
right,
So that's the time in which we connect somebody like them more closely to somebody like an Ashish or Kareem. Now he has actually come in after Kareem had got some scale and taken that company to a $3 billion exit. Right now he's in our network. That's a different kind of conversation he can, because he's actually talking to them about, okay, fine, how do you prepare the company for an IPO or an M&A? Right, which is a different conversation than how do you actually prepare your company for your Series C fundraising, or like how do you go from 10 million to $50 million. So it's a combination of both. One is like having people who understand the entire journey. Second is, when do you expose what kind of person to what kind of, and in our experience, to come back to the design part, which you just mentioned earlier, there are three things where people normally call us, and the design is actually around that three things. One is BD. So it's like, look, I want introduction, I want door openings, right? So can you actually help open ABC doors in ABC in this XYZ industry, right? So that is one very clear door opening conversations of people who can actually open doors. The second is actually what I would say is like scaling help, right? Scaling help would be like someone who have actually built large sales team, GTM teams, helping, okay, fine, here is a process of going through the GTM. They could even also help in identifying and scoping the work of like the right kind of people to be hired for scaling an org, etc., things like that. And the third thing is capital raising. Like many of these companies will come back and say, like, look, I want to connect to A, B, C founders, firms at the partner level for our Series A. I know that Anandpula will be Series B. Now, what happens is when we make that introduction to that partner in whatever top tier firm, there is a thing that, okay, fine, you introduced us. If this company performed very well, you will follow up in the next round, right? So it also becomes a much more closer, like a much more trusted introduction, which help the founders.
Very interesting. Anand, and I completely understand. I think that level of calibration is very important, right? In terms of who you bring when, at what stage.
Yeah.
I think that is very, very critical. Anand, what do you make out of the excess liquidity that we have, right? I mean, I think, India is clearly the focal point, right? I think everybody is kind of participating, wants to be part of the, the narrative, which, the story which is coming out of India, right? Last 1.5 years, we've seen, literally everybody wanting to sort of participate and at an amazing valuation. I think, we never saw this kind of this kind of confidence, right? And absurd, right? In terms of participation. What do you make out of a situation like this? I mean, is this an aberration, or is this, given the possibility that exists, right? Globally, in terms of the transformation that we're going to see, right? In terms of how work happens, how interaction happens, and second, which would be India centric, within inward looking opportunity where, homogeneity and certain homogeneity is coming in, right? Which never existed in India. What do you take out of the liquidity condition that we see?
Look, there are two ways in which you look at it, because there are two markets, right? One is India for India and India for the world. So India for India is one where a lot of action is happening now, and a lot of capital is coming in.
Right.
So how will I size the opportunity for that? Is if you take like developed technology markets, right? US, Europe, etc., and even Korea and stuff like that. Anything from tech market cap as a percentage of GDP is anything from 15% to even 30% in some cases. So that's a range. So if you take 20 as a range, and I know government have different targets, but I take a target of 7 trillion for 2030.
Right.
Take 20% of that. So you have $1.4 trillion of value to be created. Now, India could be actually 25% of that or something at a higher number. But I'm saying, and today, if you put the value of all the tech companies India focused together, it's 200 billion or 250 billion max. I think that's where we are, right? So you're seeing in the next decade, or probably actually we don't even have a decade, like in 9.5 years,
right?
You're looking at 5x or 6x from what you are today in terms of total, and that adds to around, in physical number, it's around $1.2 trillion more of value to be created.
Right.
Assuming that we are actually going in the same journey and same path, and a lot of incremental value going to be created from tech. So that's one major theme where a lot of these investors are investing. So it's not just liquidity, it's actually people realizing that, look, This is happening. COVID had been a positive factor. It is driving adoption of technology. And if you're not here, we're going to miss the bus in the last billion people market in the world. There's no other market. So this is the last bus, right? So that's one thing. So that's one. Now, the second thing is India building for the world. So if you think about global SaaS market today, it's around $300–350 billion. That's a market size. Global software market is almost around $2 trillion. And that will go to $3 trillion by 2030. Again, I'm looking the decade forward thing. We won't see anything more than 10% of that market in mainframes and stuff like that. There is like almost everything is going to be in cloud. 90% will be in cloud. So this is a $300 billion market going to something like $2.7 trillion market. And out of that $300 billion market, less than $20 billion of value, revenue is currently being built out of India. So it's like a very, very small piece of the entire market. So if you think about outsourcing, 45% of the global outsourcing happened from India, right? So even if 10% of this global market get built from India, you're again talking about $1 trillion plus market in the software side. And the software built from India today, that market is like, I don't know, if you put everything together, 60–70 billion. Everything together. And I'm adding even companies like Zscaler, which will be half of that value, right? It's like around 33 billion. I don't even know whether you know this company. It's out of Chandigarh. Mostly out of Chandigarh. Most of the product is built out of Chandigarh. It's listed in NASDAQ, $33 billion in market cap. And they've just raised $130 million before their IPO. Like a super under the radar company from an Indian tech ecosystem.
I haven't heard of them.
Yeah, so it's a listed company in NASDAQ. You should go and one of the best cloud security companies in the world, but they have a large team in India building. So I'm adding all that, even if I'm adding all that, like 70–80 billion is the total market cap, going to $1 trillion, total valuation going to $1 trillion. So it's a massive opportunity in both these constructs. You're seeing in one, it may be a 6–7x up, another it may be almost like a 15x up from what it is today in value. And both markets go into $1 trillion plus. It's like a huge opportunity for anybody to miss.
Very interesting. Anand, what is happening? I think, and I completely kind of agree with what you're saying. I think that the transition is going to be absolutely phenomenal when it comes to value creation, right? And what is also happening in this, is a huge change in strategy that the funds have had, right? I mean, we've seen many of the funds, for example, Sequoia coming up with an accelerator program, right? Google is doing something on that same front, right? I mean, the entire construct of how most of these funds operated, right, is also kind of changing, right? Everybody wants to catch them early, right? Today, literally, paper-based ideas are sort of getting funded, right? Is there a temptation on your side as well, right? Are you also looking at, is there a change in strategy that you have in terms of engaging startups much early on, right? Given the dynamics of the market, right, that we're seeing, is that something?
No. In fact, we are just struggling to process all the things which comes our way. So look, I would say it's very interesting that you brought this question. So what has changed in the last 18 months? This is from our point of view, right? One is you have pure traditional, like you have Sequoia, you have an Andreessen, you have a like Excel, Lightspeed, etc. Pure people whose DNA comes from early stage pure venture. For them, it's like you cannot miss out on the next week. They lose money by missing out on the next week. Right. So for them, it's very important that you go in early, you actually figure out more ways to kind of lock in that founders early. For people on the other end of the spectrum, you have somebody like a Tiger or SoftBank who is completely changing the world by saying that, look, at growth stage or like at a large capital world stage, now venture investing has moved more away from being an art to a science. Certain metrics you can actually look at. It's actually kind of more measurable. So you can actually have an army of people and you can actually solve the problem by capital. By taking a view that, look, we have multiple billion-dollar funds, $10 billion, $100 billion, SoftBank, etc. And we are okay to make a 20% IRR and 2.5 times multiple on that money. But let's make this more like, I won't use the word I'm not using the word commoditized, but I don't know what is the right. So this is like, there is a phase in mutual funds also, like public markets also, where it is much difficult to access public markets, like institutionalized investors, and then certain set of funds who came in who reduced the cost of owning that and democratized, right? And that's the right word to kind of use it. So this democratization of owning tech for the larger institutional investor class itself is actually happening with the large stage guys. And for them, it's like, okay, fine. They putting a $50 million check even at a Series A company, etc. It's like writing a seed check because their fund is like $10 billion, right? So it doesn't move the needle. But their idea is, if this become big, can I put $1 billion to work here, and can I make 2x in that investment, or 2.5x in that investment at IPO? Then there are people like us who are more like specialized people, and they're like, there's even buyout guys, etc. in the US who are like us, who are like, look, there's a certain set of expertise we bring in. So we will come in with a Tiger, we will come in with a Sequoia, we'll come in with a Lightspeed, etc. But our job in the cap table is very different than the others. A pure VC or a pure capital play, I think. We are like more specialized operational help. Who would actually, whose money the founder takes, saying that, okay, fine, Antpillar is going to bring this value, or like a XYZ other firm, which is operationally focused, is going to bring this value to the table. So that's the three worlds of technology investing, which is actually going to happen. And like, so people like us, the examples in the latest stage in the US would be like somebody like a Vista, right? So they are like much larger buyout firms, etc. People like us may evolve into that area. Which should be like more controlling transactions, more larger ownerships, more later stage, and all this stuff.
Very interesting. Anand, I have a question which is essentially in the same territory, right? I think one thing that I've been looking at, I've been talking to many founders, right? I think there's a certain shift which has happened, right? With excess liquidity also comes that, right? I think, and I would give it to the Indian founders. I think they're extremely savvy, right? I think the exposure is also like that, right? One thing which is now becoming a constant across many of them is they're wanting to solve problems with money, right? This typically happens in a consumer internet market, right? Where you kind of incentivize, essentially you're trying to sort of, kind of bend the curve much faster because, there are investors on the cap table. They need to sort of, they have a certain timeline to operate it, right? But that's becoming part of the thought process. That's becoming a key part of the thought process, right? Do you think is that something that you kind of support? Is that something that you agree with? Because this is a very different kind of a dependence on capital, right? This brings in a very different kind of inefficiency, right, in the process, right? And we might not live in the kind of environment that we are, right? I mean, it's a unique environment, right? This possibly might not get repeated in the next 10, 15 years, right? Which could mean that, with that mindset, given an adverse condition, it might just become very difficult to sustain, right?
Like this very interesting thing that you brought this up, and this is a question which kind of comes up quite a lot with a lot of people. And in fact, believe me, a lot of founders are also asking the question, should I do this way or not? Because it's kind of a very playing with fire kind of scenario, right? If the money stops, the company can go down. So the answer to it is this. And the good place to refer is Blitzscaling, the book which Reid Hoffman and Chris Ye wrote. So Chris Ye himself is a member of Antpillar Network, who is a co-author of that. And we actually bought Chris and Sequoia and did a bunch of conversations with founders just before pandemic started last year. This is possible if the business had the nature of like a blitzscalable company. And what is a blitzscalable company? Right, where you actually say, okay, fine, as a separate unit. So you talk about unit economics, right? And this is all things are connected. So there are certain companies which actually are like, I say, cookie cutter companies. You make one cookie, and you would become very good in making that one cookie, and then you kind of replicate it. Broadly, that's the way in which you grow the business. And then the question is like, do you build a machinery of scale to kind of like generate cookies super fast, right? And then is there a market enough to buy the cookies? Then the other thing which happens is companies which are blitzscalable. Those markets are typically, I think, take about a two-sided marketplace as an example. So this kind of businesses where you need to have certain scale in suppliers, or you need to have certain scale in customers or potential customers in the marketplace, or you need to have certain kind of, even to an extent, fresh to home's case, right? Certain kind of infrastructure already set out in place,
right,
in terms of sourcing before you can actually hit the scale.
right.
So there you need to raise the money and build that scale in whatever is needed for the company to actually attract the customers and come in and pay them.
Absolutely.
Right? And media companies, for example,
right.
like short form video is a great example, right?
Right.
There is no way you have to actually build the entire ecosystem and then start monetizing at one particular point of time,
right.
and then the monetizing becomes very fast and scalable. So two kind of companies, what I would tell founders is like, just go and assess whether you're a cookie cutter or you're a bit scalable company.
Right.
If you're trying to kind of throw money at a cookie cutter company problem, that is most probably going to blow up.
Okay.
The other one, you need to go with your gut and make sure that you find the right investors. So that's the next question, right? Now, if you get the wrong set of investors for a blood scaling company who don't understand that concept, that also can be massive problem. Thankfully, like some of the US investors, etc., like some of the hedge funds who are coming in, like seasoned investors like Sequoia and all, they all understand that playbook. You should be actually with them or Tiger or people like that, who can continue to invest and back you as long as the other metrics for a blood scalable company are being met.
Very interesting. Very interesting. Anand, we have had a phenomenal event, right? Which is that of Zomato listing, right? This is more India centric, right?
Yes.
But I'd love to have your views on it, right? I think it's been a watershed event, right?
Yeah.
With many investors, right? And everybody's been excited about it, right? Because there's finally, some visibility, some light at the end of the tunnel, right? Otherwise, it was an extremely complicated environment for them to sort of operate, right? Typically moving the company from, say, geography A to geography B, right? I think there were so many nuances that one had to manage, right? How do you view this event, right? What are the kind of possibilities that you think are going to emerge from this, right? I mean, is this going to bring in a very different kind of confidence, in international investors to come in and participate in businesses that are being built in India, for outside, right? How do you view this as a play?
Yeah, look, I would say there are 3 watershed movements for India tech, and Zomato IPO was pretty much the second one. The third one is yet to come. So the first one was probably the Flipkart exit, I don't know, because that gave a lot of interest and kind of rekindled, because 18 months before that was actually a pretty difficult period for Indian founders to raise capital and all. And then that happened, and that changed a lot. Then the question is, okay, fine, companies are getting to scale, but can they IPO, and can a blockbuster IPO happen? And Zomato happen now. And as long as it stays strong, etc., like that is one. That's the next watershed event. And on the back of that, I think there'll be a bunch of other IPOs can happen in the Indian market. And then the third thing which need to happen, which I think will happen very soon in a matter of months, is we'll also see some India for the world companies going IPO in NASDAQ, which are like very well known as Indian companies, not like a Zscaler, but like, because that is not even known. People think that is just a US company went public, right? But versus there are some others, like, I'm pretty sure, like, you also know about, I'm not mentioning names because of confidentiality reasons, but I know that 3 DRHPs probably could be filed within the next 30 to 60 days to go public in NASDAQ. And that would be actually giving more visibility to the global investors.
Right.
And what this will all do is not only bring more money to the companies, but also the companies which go public will become like, so say one company in the SaaS space which goes public in NASDAQ could become the Salesforce of India, right? Because they will actually start building other things around them. Like Zomato could actually become the next, it could be the Alibaba of India, who knows, by building more things around them, right? Because now they have capital, they have public market capital, which is much more cheaper, etc. They could probably build, you don't know what Zomato will look like 10 years from today. And it has got a young, strong management team.
Very interesting. And but towards the end of the conversation, last few questions, right? In interest of time, which are some of the areas which have, which have become very, very exciting, right? I mean, and you're tempted, right, as an investor to look at them, right? While it might not be part of your core thesis, but for example, fintech is doing phenomenal right now, and it's playing a very foundational role for I think India as an emerging economy, right? I think that's the case across many other emerging economies, right? I think US has led the path in that sense, but I think we're seeing that happen across, right? what are some of those emerging areas that are part of, say, your radar?
Yeah.
Right?
So again, the two buckets, right? Offshore, building for the world and building for India buckets. So fintech, by the way, is a space where we have Servify's InsurTech. So it's in the larger bucket,
Right.
and we've done well in the last round. We still look at a lot of stuff, but what we are really looking for looking at the future, four main themes. One is automation, which is like software automation, not hardware. We don't do much hardware stuff.
Right.
So we believe that the next level of RPAs, low code movement, low code, no code movement coming into RPAs, etc. Like that's an entire area where we are focused a lot on, because I think the world will be much, much more automated in the next decade. The second thing is the future of work and education, which has got domestic India aspects and global. So one of the recent investments we made in Skilling, for example, is an investment into that space, right, where we believe that engineering colleges will actually move online in the next decade. And can we actually build a leader in the world itself in that space from India, right? So that is one, future of work and education. Another is the entire dev tools. If the world is moving lock, stock, barrel to cloud, who's going to build the tools for building that product, right? So Postman is a great example, right? I would say Postman is a poster child of, because India have the world's largest developer base, and it is actually going to be that for the next decade. Right. So no other country is actually going to be competing against that one. And then the tools, it makes sense for a company sitting in India to build the tools for these people. Right. So that is a big area which we focus on. So look, in general, domestically focused areas we're very focused. We like EdTech quite a lot. We like fintech, but actually we think with the rails of fintech, not the consumer focusing parts of fintech. Quite a lot. That's an area where India need to kind of make a lot of development. And we like ag and food related economy. That is actually a big area in India where, again, we have a long while to go, and I think India would probably lead the world in a lot of ag and food related technologies.
Interesting. I'm gonna reserve a lot of questions that I have around, especially those areas, right, for our next conversation, Anand. But Anand, which are the emerging geographies, right, that you think have become extremely exciting, post-COVID environment, right? We clearly have the leaders, right? Developed nations are the largest consumers. Other economies now, which are kind of coming up in a brilliant way. Indonesia, for example, is phenomenal, right? The way it's coming up. What is your sense of that? I mean, which are some of the key economies that you think are going to do fairly well in the next couple of years?
One market which Indian founders and some of the founders are actually already in here, like Freshcom, for example, is the Middle East, right? So Urban Company, for example, is doing very well here. So I think Indian founders should look more at Middle East, because it's like most of the market is centered around few large cities, and much more higher purchasing power, etc., and much more easier for Indian companies to operate here. And key, I think Indian companies have not done that much of a growth into Europe. There were multiple reasons why Europe was difficult, even though it is a large market to penetrate historically. I'm talking about more B2B sense here. But a lot of that barriers actually become easier or lower due to COVID, right? So that again is an interesting area. Like, say, for example, we have companies like Servify, which is expanding very fast into Europe. It requires hiring, like you cannot have a French guy selling in Germany or vice versa, right? So it need very specific, again, go to market in these markets, but that's a market which I would urge entrepreneurs to actually focus on. Southeast Asia, by the way, while it's an interesting market, I think a lot of capital from China will also flow into that. So from a valuation and competitive sense positioning, I would, look, I'm not an expert in that, but I've heard many founders saying that, look, all the Chinese money is also there. That's pretty much the only place where the Chinese can easily access today, given all the global geopolitics. So that's becoming a little less attractive. That as a market, it is large, but competitive dynamics is difficult.
Well, I think there are nuances to that. I think it's not as straight. And I completely agree, right? I think the entire geopolitical complexities, it's a fairly complex equation. I think there is a certain aversion when it comes to a certain quality of money, right? Coming from a certain region, right? And of course, like I said, there are many nuances around it, and we'll keep it for next conversation, right?
Yeah.
Anand, my second last question, right? I think we are in a very different time, right? We're in a very evolved time, very dynamic time. This is a time which is, going to require a very different kind of, a founder, right, to build
Yes.
companies, right? What are your thoughts around it? I mean, it's a cliche question in a certain sense of way, right? But I think these are very interesting times. We require a very different maturity in founders, right? What's your sense of it, right? Has this changed from what we saw in say a couple of years back to where we are today?
Yeah.
In a far more connected world, a transparent ecosystem, right?
Got it.
Very quick turnaround, very clear asks, right, by enterprise customers, right? What's your sense of that, right? I mean, are we, is this a game now which is for a far more evolved, sharper, mature founder? How do you read that?
Look, founder market fit, I'll go back to that. So there is no one size fit all, but in enterprise side, I will clearly say that the learning curves are actually becoming shorter. That means that you need people who understand the market you're operating and the GTM, like literally from get-go, like, thinking of acquiring that in 2 years and let me build a product and people will come, won't happen. Like that'll be waste of time. And in 2 years, your product will be also out in the market because things are changing very fast. Then the other thing in the consumer side is like if you're building a scaling consumer company, I still think that young founders are actually excelling in that space because of, like, again, they come with less baggage, right? And that helps. And I know it's a strong statement because there are many other older founders who have actually built scale companies compared like the people who are in the 30s compared to the 20s. When I say old, which itself is not old in normal sense. But when I see cookie cutter businesses, I do see that people with probably 10 years of experience in their back, even a failed company before, they are actually much more better in those. And because they again have done a certain amount of learnings, which like can help them scale those businesses faster.
Very interesting. And my last question, right? I think they're in extremely dynamic time. Something that you alluded to in one of the points you sort of mentioned, right? Is that consumer life cycles are going to be very different, right? They're going to be in a very, very dynamic environment when it comes to consumption, right? Even if you're in an enterprise space, right, where you are, say, an arm supplier, if you're not playing the game yourself, right, but you'll still have the risk, right? Because the entity which is consuming your product, right, will be running that consumer side risk at some level, right?
Yeah.
And that's going to make it very complicated. That's not something which is, a characteristic of one market. This is something which we're going to see across market, right? And I think content has again played a huge role, right, in terms of the consumer side influences, right? Now that will essentially mean there's going to be huge pressure on the entire supply chain, right? And in an environment like that, right? What's going to be that advice that you'll have? It's cliched in a certain sense and way, and I hate asking this question, right? But what will be that advice that you have, right, as somebody who's walking that path with the founders, right? That they these are capacities that they could build in the process. These are mindsets and capabilities that they can create. As they enter a phase which is going to be extremely competitive, extremely compelling, is going to have a very, very demanding environment, right? That they're going to operate. So what's your advice to the founders who are going to be operating in this environment now on?
So again, very different advices to entrepreneurs who are in the enterprise and consumer side. So enterprise side, it's actually very clear that where people are finding phenomenal success, like out of ordinary successes, where they can lock in their customers, etc., are people who really think about their customer success. So like say, for example, we have our portfolio companies which are very deeply engaged with their customers, not on the product which they currently have, but where their customers company need to move in the next 10 years. And how can our company actually build a product which actually make them successful, right? And then we become embedded, we become like core product developers along with them. And that becomes global products and massive, like single plans, $100 million, $200 million that we're talking about. So that's one. Really think about where your customer is moving and are you building for the future with the customer while you are servicing them today. The other thing in the consumer side, a lot of that is actually about being nimble. Because what we are going to see in the next 3-5 years is these consumers who are experiencing buying things online and online economy, etc. The digital economy, digital commerce.
Right.
They're going to suddenly figure that, oh, fine, I first downloaded XYZ app, but there are 25 other apps, right? Let me actually figure things out as they get more used to it.
Right.
So one thing which I would say, when I went to China to start investing, the market leader in e-commerce was a company called Dangang, which nobody even probably know these days, right? Right. Alibaba did not start Tmall 1 year after we started investing in China.
Right.
Right. And then in 5 years from that date, Dangang was a failed company, which is a market leader at that point of time, which nobody thought that would be Singh, and Alibaba was the number one, and they were thinking about going public. So even 5-year time period, you can beat today's market leaders to the dust.
Right.
A company which don't exist today could be the biggest Indian consumer tech company 5 years down the
line. Right.
That's an opportunity. That's what existing guys have to worry. That's an opportunity for new guys to come in.
Interesting. I loved every bit of the conversation, a little bit short, right? And I would love to continue this across, many of our other conversations, right? And I would love to go
Absolutely.
Certain subjects.
Absolutely.
Right? Thank you so much for cutting it so sharp, right? I think each of the points that I had, right, you made, very clear distinctions between, what could happen in a certain scenario, right? And I think that's just so much more helpful, right? I'm sure
Thank you.
Many founders who are going to watch this are going to be enthralled by watching this, right? Are going to enjoy this, and I'm sure they're going to be able to visualize many of their own problems in a very clear way. They'll be able to dissect it better for themselves, right? Anand, thank you so much. It was a pleasure to have you with us.
Indeed. Happy to be of help in any way. Thank you very much.
Thank you. All right. See you.
Thanks, Ashu. Bye-bye.
Thank you. Bye.